Today we will discuss supply of money. The supply of money refers to the total amount of money in circulation in an economy, which includes currency, coins, and various forms of bank deposits. The supply of money is influenced by the actions of the central bank as well as by other factors such as changes in the level of economic activity and the level of borrowing and lending in the economy. First one is central bank policy. The central bank has a major role in determining the supply of money in an economy. The central bank can increase or decrease the supply of money by changing its monetary policy, such as adjusting interest rates or buying or selling government securities. Second one is commercial bank lending. The supply of money can also be influenced by the level of lending by commercial banks. When banks make loans, they create new money by crediting the accounts of borrowers. This increases the overall supply of money in the economy. Third one is government spending. The supply of money can also influenced by the level of government spending. When the government spends money, it increases the overall supply of money in the economy. Fourth one is foreign trade. Very important. The supply of money can also be influenced by the foreign trade, as changes in exports and imports can impact the overall level of economic activity and the demand for money. The relationship between the supply of money and the demand for money determines the interest rate in an economy. If the supply of money increases relative to the demand for money, the interest rate will decrease. As the increased supply of money makes it less expensive to borrow. Conversely, if the demand for money increases relative to the supply of money, the interest rate will increase. As the increased demand for money makes it more expensive to borrow.